going on, guys? And I'm back with another weekly market breakdown markup video, and we're just gonna get straight on into it. And first, we're gonna start off on US30. As you guys can see, if you've been paying attention to US30 at all this week, you could tell that we've just been having this overall expansion to the upside, clearing the liquidity that was above all these highs from previous weeks. And there wasn't really many opportunities that we could take this week due to the fact that we were just trending upwards. And you had a few opportunities. Maybe you could have gotten on some continuation level of retracements, but even then there wasn't a lot of confirmations besides that. So right here, there was no trade. Right here, I think there was a trade off the continuation level right here. As you can see, this was a good trade you could have caught. But besides these few trades, there wasn't really much you could do this week due to the fact that we've just been trending upwards. So the US30 is going to be a simpler breakdown. So we're just going to start off on right up here. So first things first, let's mark up our daily high and daily low, our previous daily high and daily low, because that's where everything starts. So we understand our daily buys and all of that. So let's mark up the daily high. Then we're going to mark up the daily low, which is right here. Right here. All right, so now that we got the daily high, daily low, let's go back to this for our chart, and we're gonna just look at the first few things that come to mind in this area of this range. So first things first, we're going to pull our fib from this low to this high all the way up here. Why? Because this is the current range that price is currently inside as of right now. So that's all that matters, and it's also inside of the range that we are currently in. Let's get the continuation level. Where is that at? All right, continuation level, that's the way it's going to be respected. So first things first, we pull our fib from this high to the low, and as you can see, if you look at the fib levels that are on this pair right now, you can see, let me fix this, you can see that the levels are all down here, majority of them. And if you look to the left, the first thing that comes to eye is this bullish order block. So it's a major one at that, because mind you, this is on the 4-hour time frame. So this is a big order block. It's a major candle. So if price is going to keep on pushing higher, the likelihood of price respecting this order block are going to be more than likely. And if we understand that our previous day formed bearish, we understand that the chances of this next candle also being bearish are more likely than unlikely. So overall, we're short-term bearish, long-term bullish. So what we want to do is, first things first, we understand that there's a 4-hour bullish order block right here. We have our confirmations with our fib. So now we're going to move on to the hour time frame, and we're going to look into the short term. So we're going to stick to the lower time frames on the hourly, and we're just going to look at a few things that come to my eyes. So the first thing I see is on the hour time frame, the top of this candle, which is the last down candle, bearish candle before this up move that then took out the highs above here. This is technically going to be classified as an hour order block, which is also in confluence with this right here, with our 70 right up under 70.5 and the 79. So this is an area that has another area of confluence. Also keeping in mind that it's the bottom of the 4-hour order block. So if price does come lower, it could possibly wick this area before possibly going higher, if price is going to continue to keep its overall uptrend momentum. And also another thing to keep in mind is under this low, which would be sell side liquidity, there's also, if you look at the bottom right here, there's a gap between this candle and this candle right here, meaning this is a fair value gap in the market, meaning that eventually price will want to see this area get filled. Could happen this week if price does want to break lower to get the sell side liquidity under this low. But if not, then it could be later on. But as of right now, we're going to stick up to here because this is our daily range that we're going to keep in mind. So like we said, overall daily range, daily bias is bearish. We're expecting price to, when the market opens, to break this low. I don't think this high is going to be broken when the market opens, or Monday for Sunday or Monday. Is more than likely going to break this low to come lower to this area of confluence down here that has confluence with our fib, the bottom level of our overall 4-hour order block. our 1 hour order block and potentially to go higher. But if that doesn't happen and price breaks even lower, what do we know? We know that there's liquidity above under this low, and we also know that there's a value gap, fair value gap on the 1 hour time frame from right here. So another thing we could do to mark up areas that price is likely to go to, if we get our fib again, we go from this low, because this is the candle that started this whole push up, to this high up here, right there. Go back to the hour time frame. What do we see? There's also confluence with this fib levels over here. And if you go to, was there no order block? We're looking to see if there's any order blocks in confluence with any of these levels over here, but over here. In this case, it doesn't look like there is. I'm gonna go to 30-minute. If there's nothing on here, then more than likely there isn't going to be one. There's not. So we just know that if price does come lower, to take out the liquidity under this low, to potentially reject this fib level on the 4 hour, and also fill in this fair value gap, the price will likely reject of some sort before potentially going even higher. So that's what I have for US30 right now. There's not much we could do due to the fact that we're trading at all-time highs. And I've learned from experience in the past, when trading around all-time highs, there's not really much you could do besides keep trading with the trend and basically just capitalizing when price has a retracement and getting a discount on price. So that's basically what I'm expecting to do, because if you keep in mind what's happening on the overall higher time frames, it's just very bullish, and I'm not going to try and figure out when the reversal is going to be. Once we get a break of market structure to the downside, then at that point I can start looking for selling opportunities. But until then, it's in our best interest to wait for the market to have a retracement to an area of discount with high probability, such as this area right over here, which is 35,400. That's the area that we're looking to target, that has a lot of confluence and is a whole number level at that. So that is ideally what we're looking at for US30, to potentially have this push downwards before potentially continuing this overall trend upwards. There might be other things that happen during the week. Maybe we have accumulation to possibly go lower, or accumulation to start ranging, and we just have to play the range at that point. And from there, we can look at other areas that we can find rejection, such as this order block. And if you go to the 4 hour time frame, also keep in mind, because higher time frames are always key, you could also look for a retracement to possibly this level right here, which is the bottom of this last up candle before this down push, which is classified as a 4 hour bearish order block. So that's all things that we'll keep in mind. But as of right now, we're looking for price to continue going lower, to potentially reject this area, to potentially go higher. So that's what I'm looking at for US30. So now let's move on to, we're going to move on to NAS100. So we're going to do the same thing. We're going to mark up our daily highs and daily lows like we do on every other pair. We got our daily low. Let's get our daily high. And what do we see? We know that prices right now more than likely to keep on pushing higher. Why? Because our last few candles on NAS100 on the daily time frame were all bullish. And why? What's another reason that price could likely go higher? If you keep in mind what happened on the higher time frames, price came down to this bullish 1 daily order block. You can see rejected it, and it's starting to go higher. And now what do we know is above these highs all around here, because this is, mind you, this is on the daily time frame. So we know that there's buy side liquidity all above these highs. And more than likely, with the rejection of this order block, and if you even pull your fib from that low to this high and look at the rejection that it had, if you pull this continuation level, you can see that's where price is currently rejecting. So I feel more than likely price is going to continue to try to go see higher prices. So let's just keep that overall. We have a bullish bias on NAS. So now what will we do? We will do the same thing we're doing with US30. We will look for areas of high confluence that we could potentially get a discount on price to see price go higher. And how are we going to get a discount on price? Simply, we're going to do the same thing we always do. We're going to pull our fib. We're going to figure out areas of high probability where we can see rejection. So the first thing that I see is this 38.20% continuation level is in confluence with this area right over here. And if you go to lower time frames, I'm going to try to find a breaker block in this area, which was actually rejected over here where price pushed higher. So we're going to go down to the hour time frame. We're going to see there's nothing there that we see of. 30-minute right here. This last candle, this is going to be classified as our breaker block, which is technically an order block that got broken through. But this is an area that we're going to be using as a support to potentially see higher prices. So now that we got that, let's go back to the higher time frames. As you can see, it's close to this 38.20% continuation level. Is not perfect. So in my eyes, it might not be ideally reject to the pip. It might be see a wick, possibly like this we did here. You can see how it rejected but held this level. So it could be something similar to that. But we just know overall, this is a low confirmation breaker block. But overall, we're keeping in mind that the top of these candles is what we're ideally looking at. So now that we know that we have high confluence over here, where's another area that we have high confluence? We're going to look for the same thing, order blocks and breaker blocks. And the first thing that comes to my eye is right here, the last down candle before this up move, which since we're on the 4-hour time frame is going to be classified as a 4-hour bullish order block. So this is what we have right here. So now that we identified two areas that price could possibly reject off of before going to see higher prices. And right under here, under this daily low, we're going to have sell side liquidity. Why? Because there's liquidity built under all of these lows, meaning there's sell stops here, the stop losses from people going long. So that's why sell side liquidity. Same thing with the buy side liquidity. The reason it's buy side liquidity is because above all these highs are buy stops from people trying to catch the breakout, and stop losses from people that went short in the market, holding all the way down to here. So now ideally, what do? We just wait. Price could possibly go see higher prices this week, and then we'll just have to change our fib. And in that case, if we do, it could potentially make it even better for us. Why? Because then this 38.20% continuation level might even be right where this is right here at this breaker block. So it all depends. But if price doesn't see those higher prices and starts to reject right away, because as you can see right here, this candle took out the liquidity right above these highs before rejecting. So we could see a retracement to possibly reject off of this level before seeing higher prices. Or we could do that, reject, do whatever we're going to do to then come lower to reject to possibly see higher prices. But until we have a break of market structure to the downside, I'm not going to be looking for sell opportunities. Same thing with US30. They're both very similar pairs, so they do very similar things. And if we're bullish on one pair, more than likely we're going to be bullish on the other pair. And if you also keep in mind, if you look right over here from this candle to this candle, this is a fair value gap in the market, meaning price is more than likely going to try to come and fill this area in at some point in time. And in this case, it just happens to be right where our other confirmations are. So what does that tell you? There's a lot of confirmations down here in this area for price to potentially come lower to reject off of. And what do we see now that we're on the hour time frame? Right here, we have our 1 hour bullish order block. This is a bigger order block too, but as you can see, it's in confluence with the bottom of our 4-hour also. So now if we come to the 4-hour time frame, look at the overall picture, we have a lot of confirmations in this one area for price to potentially go even higher. So that's it for a NAS100. This is ideally what we want to see. We already took out the buy side liquidity above all these highs. So if price does want to see higher prices, it could come down to get people to assume the market is going to go lower, but to again just get a discount on price to potentially just see higher prices during the end of the week. Because ideally, I want to see new all-time highs for US30 and NAS100 this week. So that's it for those two pairs, and now we're going to move on to GJ. So just like everything else, it's very repetitive what we do. We're going to get the daily high and daily low, because why? We need to understand our daily ranges. Daily low and the daily high. So right now, the first thing that I see is that overall is very bearish. We are losing a lot of momentum in the market and it's just falling. So now that we know that on the daily time frame, let's go down to these smaller time frames. Move this over. This just like that. We look at the daily range. As you can see, price was in the midst of falling very low. And the first thing that comes to my eye is these very relative equal highs above all of this. All of this up here, I'm going to classify it as buy side liquidity because these are relative equal highs, meaning there's going to be buy stops and stop losses from people that went short in the market. So what does that mean? That there's liquidity all above here, meaning eventually we will want to see price go even higher. And if you also look, we've been creating equal highs around this area this whole time. So more than likely, I'm expecting price to want to see higher prices when it does. So what's the first thing that I see right now? We're going to look to the left of this area. We're going to start to pull our fibs and look for potential order blocks that price could potentially come down to reject. So we're going to go from this low to this high. We're going to take off this continuation level. And as you can see, currently we're at the 62%. In my opinion, price could reject it and start to move up, but I still think since we're overall bearish, we're more than likely going to break this daily low to come lower to see potential prices in here. So now that we know that, we have this overall, we have a major 4-hour order block in this area, but we're going to refine it and we're just going to go down to the daily, the 1-hour time frame to potentially look for an area of more probability. And like I said right here, this is a smaller order block in confluence with these other levels. So what are we going to do? We're going to mark that out just like we do with everything else. Pull this over. We're going to mark out this 1-hour bullish order block. Pull it over. And as you can see, it's in confluence with these other levels. High confluence is what we like. We're confluence and confirmation traders. That's our strategy. The more confirmations that we have for price to potentially see higher prices, the better. And in this case, we have our fib long rejection levels with confluence with the 1-hour bullish order block in this area of confluence. And if you also pull the 50% of this 4-hour bullish order block right here, and you go right there, go back to the 1-hour time frame, you can see the middle of that 4-hour order block is the beginning and the high of this 1-hour order block. So more than likely, we're going to see a rejection from this area. Why? Because there's multiple confirmations, not just one, but we have 3 for this area. Now we just got to keep in mind, now what if price doesn't want to do that? You got to always understand what price is more than likely to do if your bias isn't correct, because we're not always going to be right. We're not always going to be right. I don't care how well you think you know the market, you're not always going to be right. So you always got to understand what you're going to do if you're wrong. So if price does break these levels to come lower, we just got to look for other areas that we could potentially target. And why? How do we find that? We go to higher time frames and we look. So if price potentially does want to go lower, where is it going to want to go? The first thing that comes to my eyes is this area over here. Why? Because it's the last down candle before this up move that started this whole thing. So what would this be classified as? Since we're on the 4-hour time frame, this is going to be classified as a 4-hour bullish order block. We're just going to mark up the high in this case. So if price does come lower, we already have an area that price is more than likely going to come to reject. And we're going to do the same thing we do with our fibs. We're going to pull our fib from that low to that all-time high. And in this case, it will kind of reject the 79%. We're not going to mark that up because the ideal trade setup we want to see is we want to see price come lower when the market opens to potentially see higher prices, taking the short-term buy-side liquidity up above these highs. And another reason I want to see that taken is because if you look, the same thing. We're doing repetitive. Now we look for fair value gaps. And if you see, with the volume that was pushed into the market, it left a gap in the market, leaving a fair value gap that eventually is going to want to get filled. And why is this a high confluence area? Because buy side liquidity is right here. So the chances of price to then push above this area to get the buy side liquidity to also fill in this fair value gap are more likely than unlikely. So this is ideally what I want to see with GJ. Another simple trade breakdown. Ideally, the overall bias that we have and the reasons we have this is because overall on the higher time frames we're very bearish. So we're expecting price is going to continue this bearish momentum to break this previous day's low to come into this 1-hour order block, also in confluence with our 4-hour fib long rejection levels to potentially see higher prices. And the reason why I would like to get into trades around this area is because it's an added discount. If you look at the range from here, from this low to this high, the lowest area to potentially get into buys is all the way down here, because this is the lowest area of this range, meaning it's the smallest. I don't know how to describe it. If you guys understand auctions theory, and then when you sell a car, you want to sell your car for the highest price, and you want to buy a car at the lowest price. So if you look at the range from here to here, this is the lowest price that you would want to be getting long into the market. Why? Because this is the lowest price that you want to buy it. I'm gonna have a separate video on auctions theory and just the difference between premium and a discount on price. But at this point right here, this is a discount on price that we potentially want to get in low to hold long term. So that's what I expect for GJ. And now we're just going to move on to gold. So gold, as you can see, we had a major drop this week. And right now, as you can see, price is filling in these fair value gaps. As you can see on the higher time frame, these fair value gaps that were all right here, what happened? Price started to fill them in right away. So in this case, it's almost done filling it. So all that's left is right here to fill in before potentially seeing the lower prices. So this is gonna be a higher time frame breakdown because I don't really look at gold often. So the first thing that comes to my mind is right here, this breaker block. Why is it a breaker block? Because this was previously an order block that didn't get respected and got broken through. And if you also look at the confirmations, this area that is now considered a breaker block is in confluence with the top of this fair value gap. So when this fair value gap gets filled, more than likely, I would want to see price to potentially continue to go see lower prices. And even if price does go even higher, this right here, this last up candle before this down move is going to be classified as a daily order block. So if price does come a little bit higher, possibly reject, we have areas that we can look to target to potentially see lower prices. So now we're going to go down to the 4-hour time frame. So now that we have mapped out where price is likely to go to reject, now we're going to do the same thing we always do. We're going to pull our fib and see where levels of confluence would be. Pull our fib from that high to this low, and what do we see? We have also a fib confirmation in this area of a breaker block, which is in confluence with the 79%. And if you get the fib and you get the 50% of this fair value gap, it's in confluence with 70.50% of this fib long, fib short. So likelihood of price coming up to continue coming up, because why? Overall, the daily bias is bullish because the previous day was a bullish day. So more than likely price might have a minor retracement to then keep on pushing higher to potentially see lower prices to target all the liquidity that is being formed under these lows. And overall, we know that higher time frame is very bearish. So we're basically trying to get a premium on price, not a discount. A discount is when you're trying to buy the market. You're getting a premium on price because you're selling at a high price. So we're potentially waiting for price to come up here, which is $17.99. I'm gonna round it to 1800 because that's more than likely where price is going to go to. 1800. You guys see the point. I'm gonna do it with this right here, just like this. As you can see, 1800. So there's a lot of confluence. So we have the 1800 whole number level in confluence with this breaker block on the higher time frames, a daily breaker block, not a 1 hour, not a 4 hour, a daily breaker block. So that's high confluence, in confluence with the 79% of our fib short. So there's a lot of areas. And if you look above, we have a daily order block right here. So potentially, even if it's just a wick that comes up, this could be even a better price to potentially see lower prices. So this is my gold breakdown. Ideally, all we're doing right now is filling this fair value gap, liquidity void, whatever you want to call it, that was created from this overall drop on gold. So ideally, what are we waiting for? We're waiting to see higher prices to get a premium to then sell short in the market. So that's really all. We're just gonna go back to each pair just so you guys see one last time ideally what I want to see happen. So with gold, we're waiting to see price go higher. With GJ, we're waiting for price to come lower to get a better discount on price to ride the market to see higher prices. With NAS, we're doing the same thing. We're waiting. We have two areas of high confluence. So if this first area isn't respected, we have another area down here that we could look for confirmations. to potentially get a discount on prices, see higher prices. And same thing with US30. We obviously know that US30 has been trending upwards, so all we're doing is trading with the trend. We have two areas that we have high confluence in to potentially see higher prices. So that's all we're waiting for. If this area right here isn't respected and we lose a trade, we ideally know that if price comes to take the liquidity out, reject this fib long to potentially fill in some of this fair value gap, we could get a good opportunity to get a discount to see higher prices. So that's really all I have for you guys today. This is a simple little weekly market breakdown. As you guys can see, I do the same thing every single week. I trade the same way. I'm not changing strategies. I look for the same things every single week, using the same concepts every single day. So hopefully this video helped you guys, gave you a better understanding of how I trade, gave you a little information on what to expect this week, and I'll see you guys in the next one. Before the video ends, I just want to let you guys know that I run a free Telegram chat that I am actively in every single morning, talking about what I expect to happen in US30, giving you guys entry signals for when I take trades, and I do this every single day. Not every day I catch trades, but that's to be expected. But majority of the time, I'm going to have 3 to 5 trades a week, and I do this all for free. I help people. I'm actively growing this Telegram chat, and I do it all for free. So if you want to better your trading and want to learn a strategy for free and just want to have a community of like-minded traders, the link is in the description to my free Telegram chat, and I'll see you guys there. Also, make sure to like on this video, comment on this video, and also make sure you look at all my other videos and concepts that I discuss on trading and how to better yourself as an individual overall. Make sure you subscribe to this channel to be actively notified when I post more videos. I post every single week, multiple times, 2 to 3 times at minimal. Also follow me on Twitter and follow me on Instagram. These are the 2 apps that I'm the most consistent on. I post my daily life. I also post trading related concepts, fitness, health, motivation, all of the above. And that's really it. So like, comment, subscribe, and I'll see you guys in the next video.